Hello, I'm John Bellew from Webber Wentzel, and I'm at Super Returns Africa with Runa Alam from Development Partners International. Good morning, Runa.
Good morning, John.
Tell me, what excites you about private equity in Africa?
John, the question is, what doesn't excite me about private equity in Africa? There are, of course, problems, as is true with private equity everywhere. But I would say in Africa the problems are execution related, whether our companies achieve their projections, as everywhere else. The rest of it is getting better and better. So there are more deals, more investable industries. We're seeing more sophisticated management and more exit opportunities. So all of those things really form the nexus of what makes successful private equity investments.
On the back of that story, you'd expect there to be money flooding into private equity in Africa. Is that your experience?
Well, a lot of announcements are made, and I suppose funds are being raised, and second and third time funds are getting larger. But the reality is we don't see that money when we look at deal sourcing. 9 deals in our last fund. 6 of them we knew for 3 years, 6 of the companies before we even started talking term sheets. We didn't see our colleagues in the business in that. The other 3 also, we didn't see other private equity funds. And so when we co-invest, of course we see private equity funds, but outside of that, the market still doesn't show a wall of money coming in. Where we see money is where we see our colleagues, and the money is when we're fundraising.
Yes.
So there's still limited money for Africa, although that's expanding. And so there you see the effect of more money being raised, but not on the ground on the deal side.
Oh, that's interesting. And you say that deal flow is good. Is your deal flow mainly proprietary sourced? Do you have intermediaries?
Our deal flow is about, I would say, 90% proprietary. So in Fund 1, we looked at over 500 deals, I would say closer to 600 to invest in 9, and our strategy is 8 to 12 deals. Fund 2, we've been out of the market with Fund 1 for about a year, so we've already looked at 150 deals, and about 4 moving forward now. Just those statistics alone would say that there is lots of deal flow. In terms of proprietary, most of our investments are companies that we've met over the many years we've been investing in Africa, and then at a certain time the apple gets ripe, and we both, the company and we, commence on a discussion to invest.
Okay, but that's quite a low hit rate. What causes deals to not meet the test?
Our strategy, which is only to invest in 9 to 12 companies.
Right.
So what we wouldn't want is 5-year investment period that we're pressured to invest in companies. We like to look at lots of deals. Our standards are very high, and essentially we want the nexus of best-in-class company. So for instance, the 9 deals, reasonable pricing is a big thing we talk about at DPI. They were done at 4.4 times EV/EBITDA, 1.3 times price to book, and that's in a portfolio that's growing at 20 to 30%, and is so profitable that just out of profits in companies we've returned 19% of the fund.
That's fantastic.
So that nexus doesn't come easy, and that's why I look at lots of deals to do a few.
And are you seeing sort of good management teams? Are you seeing improved skills on the ground?
Yes, absolutely. Again, it comes down to that one must kiss a lot of frogs before one finds the prince, but there are a lot of princes out there. Our management teams are, I would say, best in class, wherever you put them, and how one can see that is in Fund 1, 75% of our investors were new to private equity. When they came on the ground and saw our management teams, you could just see, that they were surprised in a pleasant way. These teams stack up to, other emerging market teams, even, and I would say especially emerged market teams. For their markets, they do the best job, better than anybody who would from other markets, including the US and Europe.
Yeah. And do you have particular geographies that you find are more evolved than others? Do you have sweet spots?
We are Pan-African investors, and that's again to have maximum deal flow. to take the top 8 to 12. Having said that, there are certain countries that more deals come from, just because those are the countries where the best-of-class companies have started and have evolved over time, and they tend to be Morocco, in North Africa, although we're also doing things in Algeria, and West Africa, of course, in the Francophone region, Senegal, Cote d'Ivoire, bit Cameroon, Nigeria, Ghana,
Yes.
SADC countries, starting with South Africa, but we have investments in Botswana, let's say go, and then East Africa, Kenya is a driver, although we're seeing deal flow from Uganda and Tanzania also.
So your experience really is that Africa as a whole is on the rise. Is that fair?
Yes, absolutely, and how you can see that is the industries. In previous fund, the fund was entirely telco and financial institutions. Our last fund, we had pharmaceuticals, FMCG, middle-class housing, fast food chain, consumer credit, banking, insurance, and all of these investable industries are developing now. Education,
Lots of diversification.
lots of diversification, more LPs, especially from outside of Africa coming in, but also African LPs, and more fund managers. All of that means a growing industry.
Well, that's great. And thanks very much for
Thank
this
you.
time, Runa.